This is our Forex blog for April 23rd, 2014, and I'm pretty much spending all my time working on our Forex trading signals and systems, and we plan on releasing that hopefully this weekend. I'll just quickly show you, how they're doing. In the last 2 days, we had a loss, nice big win, sold the high, and then we also had another small win here, and here's the pound. We had very tiny loss, pretty much break even, small win, about 10-15 pips, 15 pip win, and we also bought the low, which the new signals heavily use fib targets. So we have multiple swings back. I probably looked at this swing right here and it hit the 1.382 fib target and it met our bar pattern rules. Fib targets that bounce are much more likely to happen if the high before the down move is over the 38% level, so it also checks that rule. So pretty high accurate signals. I think we had one loss here, win, some very small win on the last one. In C++, there are many things we can do that we can't do or could not do in the Visual Basic. So it's the best thing that's ever happened to us, having the Visual Basic script that had about 15,000 lines. It would not compile. So very lucky that happened. Had to rewrite the whole thing from scratch. Did a lot of things totally differently. And I have about 150 different bar patterns that are quite rare. And we use close to 40 different support resistance areas as well. In these patterns. So pretty high probability, and the key to trading is, try to be over 50% winning and have much bigger wins than losses. And if you noticed on there, the wins are 1.5 to sometimes 3 times bigger than what the risk is. So that's why the system does so well. It took about 1.5 months to rewrite the system, and one of the reasons for that is I had to also learn C++ programming at the same time. So obviously that's quite difficult. People go to school for 4 years to learn to program in C++. But anyway, the signals are doing extremely well, and we hope to release them soon. The old signals are in our software as we stand. So these are the currency indexes, which I'll briefly go over. It's one of the better ways of trading. It basically lets you see as a chart what each individual currency is doing, and you can, kind of spot trend lines. And if you take that trend line slope and you project it off the high, you can kind of see very high probability reversal areas. When it hits the upper one. Also, when the trend line gets broken, the uptrend is very likely to be over. And it also kind of gives you a place to look for buys, exits, buys, and you can see here it never was able to go back up to our upper band, wasn't able to go back above the high, went sideways here for an hour or two and broke. Great place to go short. Very high probability when trends are over and after they're up for quite a bit, the euro is likely to go down. You want to trade that against a currency that's strong. The dollar is strong right here. It's trending up. It just made a move up, pulled back, and it's on its way up. It could be testing the high. It could reverse here, but it appears that if the euro falls and the dollar falls at the same time, but the euro falls faster than the dollar, you can still make money selling the euro dollar. And this is around 10 o'clock right here. You can see on the actual chart here, coming up to 10 o'clock, you had a nice little pullback, and it's a great place to go short. And you can see it fell 20 to 28 pips. You're never going to catch every pip, but it's just a great way to trade. Now, the yen was also trending up, although it's at the upper band. Let's see what else we have at that particular time. The Australian is down a lot, and it was going sideways all day. So it's very likely that, if you sell the euro Aussie, the euro goes down. This one's been going sideways all day. This one could go down, but it's also near our lower bands. It's much more likely to go up. If it was going to go down, it wouldn't have sat on the bottom that long. Let's take a look at the Euro Australian coming up to 10 o'clock. And you can see that this one fell from around 49.30 all the way down to 70. 60 pip drop. And within the hour, it fell 10, 20, 30, 40, 45 pips within the first hour. So the currency indexes really can help you anticipate trades even before they occur. That's the beauty of them. Take a look at this CAD here. A double top, daily trends down, the weekly trends down, the perfect oscillator, which most of the time when it ever hits a plus 80 or a minus 80, you get reversals. Notice the low here, that was the low. The high here, that was the high. And especially when the longer term trend is down, you have a double top here at an extreme high. This is a very high probability one that's going to be reversing back down. So which strong currency you trade against? Well, you don't want to trade against the Swiss because it's already up a lot. It's above our upper bands. The dollar looks like it's going to be going up right here. So I would buy the dollar CAD. The CAD's likely to go down. The dollar's likely to go up, or at least it's likely to go up, or I should say down slower than the CAD is. So that is at 8 o'clock. And this one's very likely to go up. And you can see a little bit after 8 o'clock right here, it just takes off. Shoots up about 25 pips in 1 hour. And like I said before, the key to trading is small losses and bigger wins. And the currency indexes really let you do that. Now, believe it or not, the signals I'm working on do not use the currency indexes at all right now. I do have plans on putting them in at a future time. And it probably would have found this sell right here. This was in an uptrend, so I was looking to buy the pullback. The reason we sold that high was obviously because it's a fib target off the previous wave. Those are super high probability. You can see it came right up to that level, and it also had a very high probability reversal bar pattern with a wick after multiple bars up. Just extremely overbought. It's also at our containment bands, which most people don't want to have to learn all of our unique indicators, which no one else has, by the way. But these 1.5 and 2.0 bands tend to be great places to buy and sell at for counter trend trades. You can see it was above the 2.0 band by 47, by almost 10 pips, right at the fib target, and it had gone up from 3,800 all the way up to 38, almost 60. So it's been going up a considerable amount, very likely to pull back, and of course very likely to find support. There's a reversal pattern, two-wave reversal pattern where it goes up, down, up. We get in after there's the selling appears to be over, and ride the trend back up. Now this one was a very small win, but oftentimes those deliver 30 to 50 pip wins when you have strong trends like this.